Happy February 10th, JLD here, and welcome to Strategy Today. This show starts off with Moonshot Mondays. We talk about some catalysts that are upcoming for MSTR. We talk about Michael Saylor being at it again. He buys more Bitcoin. He even hints a little bit at some convertible bonds upcoming shortly. We talk about a realistic path for MSTR for strategy to get to a $1 trillion microcap. And then we tackle the ongoing argument of why buy MSTR? Why buy strategy when you can just buy Bitcoin? So we dive into that. And I have two epic Michael Saylor clips you're not going to want to miss. This is not financial advice, but please do comment below. Let me know where you're watching from. If you're drinking coffee, tea, on a walk, let me know what you're doing. Let me know your thoughts on the current market, where we're at right now, and let's dive in. Okay, Moonshot Mondays. Let's start off with the MSTR Catalyst Tracker. We are just 1 day away from the MSCI Quarterly review. This is an index fund, and they're going to review and they're going to realize that MSTR deserves to be way higher in the list than they currently are, with a lot higher percentage. And then when the MSCI Quarterly rebalance happens on March 3rd, which is just 21 days away, more dollars will be flowing into MSTR in its rightful place, in a much higher place with a much higher percentage of this index. Speaking of index, the Russell Index rank day is only 79 days away. So when that happens, again, it's going to be very favorable for MSTR, market conditions, of course. And then MSTR World is happening on May 5th, which is just 84 days away. Let me know if anybody's going to that in Orlando. And then the big one, the Q1 2025 earnings. This is where finally Strategy will be reporting FASB, which is going to be unbelievably exciting. It will cause bewilderment throughout TradFi, and that's just 85 days away. So let the countdown begin. And the first post of the day is from Michael Saylor: death to the blue lines, long live the green dots. I mean, look at all these green dots over the years. He is relentless. He is savagely stacking Bitcoin, and it's only getting more aggressive. And this is what's so exciting. If you take a step back and really understand what's going on, it is getting easier and more exciting for Michael Saylor and Strategy to be stacking Bitcoin the higher the price that Bitcoin goes. And there's a lot of reasons behind that. We'll be diving into some details on why in later videos. But as you can see, that's just the reality of what's happening right here. The green dots are intensifying. Let's move on to a post from Bitcoin Overflow. He just was featured on the recent True North podcast episode. He did a great job. Really enjoyed hearing what he had to say. And he shares MSTR dots are back as expected. The Bitcoin buy will be 563.4 million from the Strike IPO and likely include 2 days of post earnings ATM. So basically what he's saying is when they had the IPO for Strike, they raised 563.4 million. He's assuming and thinking that all that's going to immediately be used to purchase Bitcoin, which is very likely. And then Michael Saylor potentially did 2 days of post earnings at the markets, selling, which was then turned into buying of Bitcoin, which then turned into our Bitcoin yield increasing and our Bitcoin gain increasing. Wanted to share this from Adam Livingston. Michael Saylor is closing in on 500,000 BTC. That's 471,000 BTC and counting. 45 billion in Bitcoin, up nearly 50% all time. Strategy has no breaks, only green dots. This is the most ultimate form of monetization of energy the human race has ever seen. The dollar cost average is becoming a relic. A few thousand potential whole coiners vanishing. Poof, vanished. We're going to stick with Adam today because this guy's on fire right now. Running some calculations to see what I think will be the most realistic path to $1 trillion market cap for MSTR. Considering MSTR was able to add 218,887 Bitcoin to their balance sheet in just under 90 days, oh my God, I think it's very reasonable to think they can add another 300,000 in a year. We still have the 18 billion in convertible bonds from the capital plan. Geopolitical catalysts are aligning. Tariffs, world governments racing to acquire Bitcoin, SBRs popping up everywhere, FASB accounting earnings results enabling huge MNAV trading. I think by the end of 2026 is a conservative estimate for 300,000 Bitcoin. Remember, Bitcoin is up 60% in the past few months and nothing has even happened yet. Lots of talk, but when the action starts, dear Lord, my conservative estimate is by December 2026, 800,000 Bitcoin held, 300,000 Bitcoin price, a 1 trillion market cap. A 4.2 MNAV would put the MSTR stock price at $4,000 per share. Outstanding shares will obviously change, but I think another 10 to 12x of MSTR stock is very possible in the next 24 months. And to those trading options for the premium the whole way there, oh wait, that's assuming they add no Bitcoin in all of 2026. What about a second year of adding another 150,000 Bitcoin? That'd probably be about $4,800 per share. We're going much higher. And then here's his chart down here, which you can pause and check out as you desire. And then we have this epic post about, instead of MSTR, why not just buy Bitcoin? The definitive rebuttal. So if anybody ever ask you this question, here is the definitive rebuttal brought to you by Adam Livingston. A lot of MSTR bears don't understand the advantage of a leveraged Bitcoin play versus buying Bitcoin outright or a Bitcoin ETF. The bottom line is that you want to accumulate the most Bitcoin, you need to use leverage. MSTR is the best way to do this. One, the core difference, leveraged conviction versus passive beta. MSTR's high octane leveraged Bitcoin strategy. Capital market engineering. MSCR leverages corporate debt, convertible instruments, and equity issuance to amass Bitcoin at scale. This is a calculated play using financial leverage to amplify exposure. Balance sheet alchemy. In effect, MSCR operates as a Bitcoin equity derivative. Its treasury function not only accumulates Bitcoin, but also imposes a structural scarcity on the asset, generating a hugely asymmetric payoff profile. Liquid constraints and force dynamics. The company's capital structure and balance sheet maneuvers often force dislocations in Bitcoin liquidity, forcing the market participants to react in ways that standard ETFs simply do not. Spot Bitcoin ETFs. Pure institutional beta exposure. Direct one-to-one asset ownership. ETFs mirror the spot price by holding Bitcoin on a one-to-one basis, presenting a straightforward, unleveraged exposure. Creation, redemption mechanisms. Designed for efficient liquidity management, the ETF structure relies on arbitrage by authorized participants that continuously balance inflows and outflows, thus neutralizing any structural distortions. Institutional accessibility. Their design is optimized for institutional investors seeking regulated passive beta exposure, lacking the dynamic supply altering mechanics of a corporate balance sheet strategy. Two, market structure and liquidity, where the edge lies MSTR's structural supply squeeze. Aggressive capital allocation. When market conditions like low interest rates and high equity valuations align, MSTR's ability to deploy vast amounts of capital to acquire Bitcoin translates into a relentless absorption of liquidity. Scarcity dynamics. With Bitcoin supply already constrained, every increment of MSTR's accumulation intensifies a scarcity premium, forcing Bitcoin prices upward through supply side pressure. Strategic imbalance. Unlike ETFs, where liquidity is fluid, MSTR's acquisitions are sticky, removing Bitcoin from the circulating pool and creating a long-term structural distortion. ETFs and their efficient liquidity dynamics. Instantaneous entry exit. The ETF model facilitates efficient, immediate access for institutional capital. APs can arbitrage away any temporary mispricings without triggering a systematic liquidity shock. Neutral price discovery. By tracking NAV closely, ETFs enhance market price efficiency, but do not inherently alter the circulating supply dynamics that drive long-term price appreciation. Three, supply-demand dynamics, the power of capital allocation. MSCR's front-running mechanism. Anticipatory positioning. By utilizing convertible debt and equity issuance, MSCR essentially front runs Bitcoin's future demand cycles. This proactive accumulation strategy provides investors with leverage exposure to anticipated supply constraints. Black hole effect. The company's treasury function acts like a liquidity black hole for Bitcoin, hoarding the asset in anticipation of long-term appreciation, independent of transient market flows. Spot ETFs and their demand absorption. Bridging institutional demands. ETFs channel demand from large capital allocators such as pension funds and sovereign wealth entities, increasing Bitcoin's market penetration without altering the underlying supply. volatility versus stability. While ETFs may inject short-term volatility due to rapid inflows and outflows, they do not establish the long-term structural scarcity effect that MSTR's aggressive balance sheet strategy induces. For historical comparisons where this has played out before, MSTR's corporate-led asset accumulation. Analogy to industrial leverage. Think of Tesla's balance sheet strategy to secure gigafactories and lithium supply chains well ahead of demand, or gold miners using leverage to accumulate physical assets. MSCR is playing a similar game with Bitcoin, leveraging market access to secure a scarce asset before its full demand cycle manifests. Scarcity premium parallels. Just as early corporate exposure to a finite resource can create forced appreciation, MSTR's accumulation of Bitcoin mimics these historical precedents where balance sheet driven demand precedes market wide recognition. Final take: which one wins? MSTR has infiltrated the legacy financial system using its own weapons, equity dilution, corporate debt, and convertible notes, to strip mine liquidity from fiat markets and transmute it into absolute Bitcoin ownership. ETFs, please. They're Wall Street's attempt to domesticate Bitcoin, turning it into a neatly wrapped, fee-generating, KYC-laden financial product that institutional bag holders can trade like soybeans. MSTR, on the other hand, is an entity that structurally removes Bitcoin from circulation at an accelerating pace, leveraging corporate financial engineering to seize more Bitcoin than spot buyers could ever dream of. When the fiat system inevitably collapses, ETFs will be trapped in regulatory purgatory, their Bitcoin legally compromised, rehypothecated, or outright confiscated. But MSTR will stand as the apex predator in a world where Bitcoin is the last remaining form of pristine capital. Adam, lot to take in there. Wow. But I'll say, man, listen to this a couple times and it will sink in. Now let's let Michael Saylor take it away on a couple great clips.
What is inflation? I would have accepted the party line inflation is CPI. And then as soon as you realize inflation is not CPI or inflation, and you can generate as many inflation metrics as you wish to generate, then you realize, well, I can just cherry pick any inflation. And so the best possible situation is to run an economy with 12% inflation while I convince the people that it's 2% inflation, because the cost of capital really is 12%, but they think it's 2%. And the difference of the 10% I get to give to anybody else I want, right? So like every pension is indexed at CPI, so I'm raising your pensions at 2%. I'm inflating the money supply at 10 or 12%, right? And that leads you to question a lot of things. Well, if the inflation rate isn't correct, then maybe GDP isn't correct. How do you actually measure gross domestic product, if it's not inflation adjusted? What's the source of the volatility and the performance? And if you don't understand why the asset does what it does, if you don't understand the economic physics involved, then you'll think it's random and you'll feel like the performance is risky. But I want to give you an example of a physical metaphor. I'm a hiker and I come across a mountain lake, and the mountain lake has 500 trillion gallons of water in it. And yeah, I don't know how it got there, but it's there. The water's chilly, it's clear. And I look down and there's a waterfall coming off the mountain lake. And the waterfall, it's very beautiful and it's very turbulent, right? Water is turbulent in a waterfall. Water is not turbulent in a glassy lake. So the turbulence is volatility, right? And there's waterfall. And then I look at it. And now if you look and you say, I don't know why that water falls downhill. I don't know if it'll keep falling downhill, but I hate the volatility. Then I guess you can take a selfie in front of the lake, go swimming, get cold and leave. But if, let's say you're not a tourist, but you're an engineer. So you come across the same lake and you see the waterfall and you see the 500 trillion gallons and you think about gravity and you think about sunlight. And now I know how the water got there. The water got there because the sun shone on the ocean. The water evaporated from the ocean. It rose up in the clouds. The wind blew it against the mountain. It condensed and it rained into the mountain, and the water ran off the mountain into the mountain lake. I know how it got there. And then I think, Well, if I create a dam near that waterfall, I build myself a dam, I put a turbine on the dam, and then I drop 1 billion gallons of water. I channel 1 billion gallons of water through the dam, drop it 60 feet. And then I plug that into a hydroelectric power plant. I spin the dynamo, I make electricity. And then if I'm really smart, I run the electric power line to a village down in the valley and I light up the village or I light up the city. Now, someone can come along that doesn't understand physics and they can say, good idea, Junior, but what are you going to do when the water stops flowing downhill? Well, I'm like, well, I actually think the water's flowing downhill because of gravity. Newton solved that for me. And then someone else comes along and says, good idea, Junior, but what are you going to do when you run out of water in the lake? I'm like, well, there's 500 trillion gallons, and I take out my calculator and 1 billion gallons or whatever. It's going to last a long time. Like, well, it's eventually going to run out. I say, well, the sun keeps shining on the ocean and the ocean keeps lifting the water out of the ocean and it drops it on this mountain. And that's why there's water in the mountain. But you're right. There's some kind of natural limit. And I suppose there's a limit to the amount of energy I can pull off of this dam, but it's a large number. It's a lot more than your donkey cart. And it's a lot more than your steam, wood stove. And it's a lot more than your coal power plant. And maybe it's a lot cleaner than burning, gasoline. So I'm an engineer and you're seeing performance thinking it's random and that's why it's going to stop. And you're seeing volatility and you're thinking it's random and maybe it'll stop. And here with Bitcoin, the reason Bitcoin's performing is A, it's volatile, but B, it's a more energy efficient state. The water is flowing down 5,000 feet because it's a lower energy state 1,000 feet below the mountain. It's a lower energy state. You've got potential energy in the water and it wants to go to ground, and that's just physics. The 500 trillion gallons of water is $500 trillion. And the $500 trillion of assets are sitting in real estate and currency and sovereign bonds and corporate bonds and artwork and equity. And they're invested in the stock of a company in Africa that's going bankrupt, right? They're invested in real estate in Cuba, in Venezuela, in Nigeria. They're sitting in a warehouse that's crumbling. It's got a 40-year life.
And there you have it. Another episode of Strategy Today. A lot going on, and it's exciting times coming up, I believe. This is not financial advice. Please do comment below with where you're watching from, what you're doing, what you think about what's going on right now in the world. A lot of great conversations are happening in the comments, so keep that going. And please remember, as always, there is no second best.
What's the second best?